In this track and trade trading training video, I want to take you through and I want to introduce you to the Bulls and Bears ribbon indicator. Now, the ribbon indicator is designed specifically for people who use the Bulls and Bears for trading to help us filter out some of the better and some of the worse indications of when markets have a tendency to trend in long-term trends. And so it's a nice filter. Now, I want to go through and just kind of look at it from a historical standpoint and be able to point out a few things to you that I think you might want to have in your repertoire when it comes to using the ribbon indicator. First of all, we're looking at the feeder cattle contract, and what you'll notice, this is a nicely trending contract, has a tendency to move through some nice trends, and so this is going to give us a good example of how the ribbon indicator helps us with the Bulls and Bears. Now, of course, the Bulls and Bears being a tool that gives us the ability to tell when a market is in a neutral trend, a bullish trend, or a bearish trend. Of course, neutral meaning that the market's yellow, and bullish means that the market is green, and red means that the market is in a bearish trend. Now, if you have the Bulls and Bears and you are a subscriber to the Bulls and Bears tools, you'll know the education has given you an indication that the market actually has little arrows, which you're seeing here on the screen, as indications that the market has changed from bullish to bearish or from bearish to bullish. These are not necessarily buy-sell signals. The buy-sell signals are derived from the changeover from color within the Bulls and Bears. So, for example, a yellow to a red would be a sell signal. So this would be a sell signal, as well as this position right here being a sell signal. So it's an indication that the market is continuing in a downtrend. Now, you'll also notice that we also use the Bulls and Bears to help us identify areas using Fibonacci retracements. You'll notice that the market has a tendency to retrace back into the Fibonacci, what I call the sweet spot, or back into the region between 38 and 61. When that happens, that's when the Bulls and Bears are going to change back into yellow. So it helps us know that as well. As this market comes down, it goes into the Fibonacci ruler down to the bottom. As it retraces and goes back into the sweet spot, or the 61.8 between 38.2, this is where you'll see that the Bulls and Bears turns to yellow. And then as it drops back out and begins the trend once again, it changes back to red. And of course, it's going to do the same thing on the other side. If we go in and we look at the Fibonacci rule, you'll notice as a rise from the bottom up through the neutral standpoint into the green area, or indicating the market is rising in price. Then when it comes back and drops back down into the 50%, the 61.8% level, 38.2% level, or into this level here, this is where it turns yellow. And then as it accelerates back out of that area, it changes to green again. So this is helping people who don't necessarily want to use the Fibonacci ruler. They can just use the Bulls and Bears to know when we're getting those types of retracements. Now, when we take that and all that information and we add it together, and we add in here the filter of the new ribbon indicator, you'll notice that the ribbon indicator gives us the ability to filter out and helps us know when some of these markets are going to continue in those trends or are going to change in the direction and go the other way. So what we notice here, and the first thing we notice on this feeder cattle contract, is this market has a tendency to be going, this is a broadening pattern is what we call this, and this is where the market actually broadens out as the trend moves. So you'll see it's a broadening pattern. And if you look closely at the ribbon indicator, it starts up here very tightly closed together. Now this is the area that we call the squeeze point, and this is an indication the market's going to come together and change direction. This is a change of direction indication by the ribbon, and you'll oftentimes see that squeeze point accompanied by an arrow within the Bulls and Bears. And then as the market begins to broaden out through this pattern, notice the broadening pattern, you'll notice that the ribbon indicator also broadens out through this area as well. And you'll notice that the longer term ribbons stay a little bit more smoothly, while the shorter term ribbons move more along the lines of the waves of the actual market themselves. And so this is giving you an idea or an indication the market is actually broadening out. And then, of course, as the market retraces and comes back through the Fibonacci center line or through the sweet spot and goes yellow, this is where you'll notice that the shorter lines of the ribbon begin to cross over. And so this is giving you an indication of market change. And so you'll start seeing these ribbons starting to cross over here at the beginning. And as the shorter term ribbons cross all the way over into the longer term ribbons, you'll notice that the ribbon actually folds over itself and becomes almost a three-dimensional look on the screen. And as it folds over itself, this is where you see areas where the market's going to have a tendency to go sideways. And this is, if we draw this in here, you'll notice this is a sideways market right here. And this is where the ribbon is actually folded over on top of itself and almost become a thin line. And then where you see the arrow indication from the bulls and bears, this is where you're going to start seeing the ribbon unfold and start coming out of that squeeze point. And this is where you're going to start seeing a drop in price again. Of course, we're going from yellow to red. Now, if we saw it go from yellow to green, we would see the ribbon would unfold on top of itself, from on top of itself once again in the same direction. And so as this ribbon unfolds and comes down, you can see where it starts to spread out, and this is where the market is indicating that it's in a broad area of trend, or a broad trend. And so this is why you see the distance between the ribbon. And so as it broadens out like that, you see the market is dropping relatively rapidly right through this time frame. And then, of course, we get a consolidation at the bottom of this trend. And as the trend begins to rotate and come right back again through that Fibonacci projection level and a retracement, we go through the yellow time zone and accelerate out into the ABCD section of the Fibonacci projection levels. So if we come in here and we look, the bulls and bears are showing us the ABCD projection levels, and we'll notice that this is where we see the ribbon coming across and confirming that the market has gone into this pullback, into the gentle pullback, which is yellow, which is our Fibonacci retracement. Again, if we lay that in here, we can see the Fibonacci retracement back into the sweet spot. And then as it projects out, once again, we're going to see that we have a correspondence between the ribbon again folding over itself again and then starting to broaden itself out and widen out as that market reaches up into the Fibonacci projection levels of 90% and 100%. Once the market accelerates out past 100%, we start looking for a retracement or a pullback, and you'll notice that the ribbon again starts to fold over itself and the shorter term ribbon lines begin to cross, and these are an indication that the market is making that pullback back into the sweet spot, which is yellow, down into the red zone, which means it's accelerated past the pullback area of the Fibonacci zones back into red. And then, of course, this market turns around and begins to accelerate back up once again. And so you can see the combination of tools being used and how they can help you make a better view, a visual representation of market movement through time.
The content of this program does not constitute investment advice. This program is to help enlighten you to the opportunities for further education and training techniques by industry leaders. This should not be considered as a solicitation to buy, sell, or invest in securities, options, futures, or Forex. Remember, trading does involve the risk of loss. Past performance is not indicative of future results. Stocks, futures, options, and Forex trading is not suitable for every investor. Please consult a professional regarding your financial situation before placing a trade.